Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 5th of November, 2018, and we're just now at about 4:20 p.m. Central Daylight Time. You know, it's pre-election day. The market has a history after midterms of moving higher within a year. Now, does it have to do it immediately? I wish I could give you the answer to that, but I can tell you, if you go back from 1946 on, that's what history has shown. So the big question is, what's the likely outcome, the impacts tomorrow? And it appears that the press has it that the most likely outcome is the president loses the House, he keeps the Senate, things move on in a dysfunctional way, they've been that way all the time, and the projects go forward. Should he lose both, then will they start dismantling his programs, and would the stock market react accordingly? You don't know. I certainly don't know the reaction. But I can tell you how the chart action is looking. And if we come to the S&P, you can see that the market held on a weekly basis the most recent test of where it finished on December 29, 2017. This literally just happened this week of October 26th. Here we are a week later, and the market, it's actually 2 weeks later now, if you want to begin that, that's the reality, and we're up from that low pretty nicely. We've already recovered almost 100 points. You can see that. As we take a look at what the chart action is doing, you can see that slam down and how the market has come up. You can also see that we do have a pattern of higher lows and higher highs. That in itself is bullish unless you take out 2633 and a quarter on this particular chart pattern. Patterns change, so I'll change with them, but on the current pattern, that's where you're at. And should the market decide to move up from here, the first resistance is back at the 200-day moving average of closes, which is 2772. So as we're at, we finished today over the 18-day average of closes, 2733.50. That puts that as something of a support level if it falls back to that. In terms of the resistance, the closest resistance number, the 200-day, and then after that we get a combination of the 100-day moving average of closes along with the upper Bollinger Band. Remember, Bollinger Bands act as resistance the first time they're challenged, support the first time they're challenged on the downside. They can then change their character to running a band, be it up or down. There's different things that occur with it. But that's the first resistance, let's call it the 2824 level. When we take a look at where the market closed on December 29th in this, you can see that the market is still doing a nice job of staying over everything. Let's go to the NASDAQ. In the NASDAQ, you never did get down to where the market finished for the year. So this acts stronger to me than the other markets because it wasn't as weak on the way down. But in terms of day-to-day action, it's actually a bit weaker because it did rally up on Friday. It hit intraday, the 200-day average. It has now sunk back. The chart pattern is one where you have a low here that shoots up, takes out a previous high, and in a pullback. To get this market going again, the 7143 level, as I'm reading it, looks to be the resistance area. It's about 200 points higher than here. In the Dow, you're caught between the 200-day average in gray, right through here, the 18-day average in the red, you can see where that's at 25,176, and the 25,480 level, which is the 100-day moving average of closes. Assuming the market can bust through this, because we keep hearing that markets after the elections typically go higher, I'm not saying the next day, but typically go, that puts the Bollinger Band back in place at 25,871. You've got to keep remembering, remember that shocker when President Trump won and the market wasn't ready. First it dove, then it came back. You never know what you're going to be dealing with these elections. And this seems to be an election that's somewhat of a referendum. I think I'm being generous when I say that, on the president himself. Of course, there's different views on that, and I'm not getting into it. My job's a chartist, not a politician. As we look at what happened here in the Russell got under the 100-day, under last year's close, went down rather sharply, has come back, and suddenly it's trying to base out there. Let's assume the market moves higher because of what we heard. In terms of after the midterms, the market seems historically to go up. Then the 1604 level is the first resistance. Let's assume the market gets a shock. Well, this area is still going to be a support zone. So I think what you're getting in all the stock indices is they've had their correction in October, and it could be a surprise for the market as to what happens as we finish these midterms. In the VIX, you've got a pattern of lower highs, lower lows. That's bearish. You're under the 18-day average of closes. That's bearish. Downside momentum. But you are in a neighborhood that's oversold right now. Not a surprise. As we look at the bond market, you've gone from the upper Bollinger Band to the lower Bollinger Band in a week. The market's had a little bit of everything, and that's all that I know how to say. It's oversold. It's hit downside targets. We have an FOMC meeting coming out this week. The expectation is that the Fed will stay on its path. They're going to do a December hike. We'll be looking at the wording. As the statement comes out, are they concerned about anything? And that's about all that the, if you will, the doves can hope for, that the Fed gets scared about something. I don't see the Fed getting scared about anything just now. I don't think they look at the stock market break. I don't think they look at any of that. I think they look at the data, and data is still strong. Weakening a bit because of trade wars, but still relatively strong. If you notice, the 10-year note's not as weak as the 30-year bond. 30-year bond went to the lower Bollinger Band. Not quite the case here. Market still has momentum to the downside. It is not in oversold condition. You have lower highs, lower lows. To negate the downtrend, you'd have to get back over 118.22.5. Open target remains this 117.23 area. TLT is more similar to the bonds. It went from the upper Bollinger Band right to the lower, not even getting a bounce. So it just completely fell apart. And other than the election, what's going to make it go up in front of the FOMC meeting? I'm not sure much. In the dollar index, well, does the election result in some of the events, in fact, a number of them that the president's put in, getting unwound? He'd have to lose both the House and the Senate, and then we could see dismantling of some of his presidential orders if they can get enough votes to do it, number one. I don't know that they can, but there's a lot. So the dollar slipped a little bit today as the eurocurrency got a bid, even with Italy saying again, they're not changing their budget. They're going right in the face of Brussels. They're going to spend, and this has never happened. It's never happened in the European Union that the EU members, the heads, ministers, have to tell a country no on their budget. They're headed to that. Generally, it's go back and rework it, do this, and the Italians are saying no. Yet, if you'll take a look, you have a market with a higher high, lower low. It's been oversold. It was embedded. It's lost that status. Typically, when you lose that status, price and the 18-day average make a run for each other. That seems to be what this market is doing. Brexit, your guess is as good as the next man you want to talk to. You got a lower low, a higher high. Is there going to be a soft landing, a hard landing? This has been a whip. You came down hard with a vertical price break. You've rallied just as hard. I'd look for strong resistance at the 130-100 level. In the Japanese yen, the trend is down, lower highs, lower lows. Once we got past, about 2 weeks ago with that break in the stock market, it seems so far ago, the people were buying, if you'll recall, 10-year notes, they were buying gold, they were buying the yen, they wanted to get out of risk. Well, now it's back to risk on going into the election. I didn't know there was an election. That's what that's telling me. In Bitcoin, the market still acts to me like a market that is overall basing. looking like it's gradually trying to move higher, momentum up, bias up. I look for resistance around 6,500. It has become a very tame market. Look at these days ranges. I mean, they're not very big. $65. You remember when a small day was $600 versus WTI and Brent. Well, all the sanctions on Iran are in. We know there's 8 countries that got exemptions. 2 of those already aren't importing. The market spread widened out in favor of Brent a little bit today. You can see the bounce that you're getting here in the Brent off the Bollinger Band, whereas WTI is still red there, and you went green in the other. So we have a market that is still overall bearish with an embedded reading. Here's what really happens. Iran still got more oil production going. We're getting more production out of the Saudis, maybe out of the Russians, and our own production, and you may have a world economy that slows down. So that seems to have weighed on everybody that was talking when we were pushing 85 Brent that we're going to 100. Those people were very wrong. They may be right down the road, but they're wrong at this point, and when you trade futures with the leverage, got to be careful. In the gasoline, we still have the embedded bearish reading. Until that's lost, there's no trying to pick a bottom here. This market has collapsed dramatically. I'm sure at some point here it's going to find its legs. I can't begin to tell you. And what happened here, if we get rid of today's action, you drop down and you had a weather change. And on that weather change, because you're going in with stockpiles that are so low from 2005, we haven't gone into a year, a winter, where the stockpiles in that gas are this low. The market heard the first weather in the teens. Yeah, Chicago's going to be there, they say, this week. And remember, what we get moves across the country, and boom, you took off to the upside. So that's your first real shakeup. This is going to be an important area that we look at. Was that a bottom? We'll find out. One of the things, as you know, that I do is I write like mad. I try to offer my people as much research as I can give them. And in that research, I'm writing generally twice daily about the markets. Monday through Thursday, I'll give them my morning update. I start them off, though, with, in the morning, a video. And in that video, unlike these, I will say, buy here, sell there, put a stop, do this. That's the way that I can talk. I cannot in these videos. These videos, I can talk the broad swaths of the market, and that is because the government regulation. It's that simple. Okay, so I put out my own advisory service, and I want you to take a look at it. You can have it with the audio. You can have it with or without, by the way, the trade recommendations. The commentary can come to you as well. But if you haven't tried it, and especially during these elections coming up and what's going on, you might want to take a look. It's been interesting. Give us a call. Go to our website to sign up for it, or just click up here. We'll be happy to get it for you. I'll be starting, remember I was telling you also, I'm starting a library of different technical studies. We're just about through with the programming as to how I have to begin that. We've put together also a brand new whole futures trading kit. You're going to hear about that shortly, and it's so expanded. I haven't redone one of those in probably 7-8 years, so I think you're going to like what you see. I'm Ira Epstein. You have yourself a good day. I'll talk to you all tomorrow.